Hey there, just a quick note. This video is meant to share ideas and information, not to give professional advice. The thoughts shared here are simply my personal opinions and experiences. I'm not a licensed financial advisor or investment expert. While I aim to provide helpful tips, everyone's situation is different and I can't guarantee specific results. Consider this content as a starting point for your own research and please consult with qualified professionals before making important financial decisions. Thanks for watching Grow Wealthy with me. Why are there not more people talking about how US interest rates impact us here in the UK? We Brits often think of US economic news as a distant event, like a small tremor felt miles away from an earthquake's epicenter. However, when it comes to US interest rates, the tremors can be surprisingly strong, even across the pond. You see, the US Federal Reserve, their central bank, wields significant influence on the global financial system. When they tinker with interest rates, the ripples are felt far and wide, impacting everything from mortgages to the price of your weekly shop. So whether you're a seasoned investor or just starting to save, understanding how US interest rate changes affect your pocket here in the UK is crucial. Think of it like this. The US economy is a massive ship in the global ocean. When that ship changes course, even slightly, it creates waves that can rock smaller boats like ours. Ignoring these waves isn't an option. We need to understand them to navigate effectively.
And action.
Now, before we dive into the how, let's quickly demystify some financial jargon. The US Federal Reserve has a few levers to control interest rates, and two often heard terms are the primary credit rate and the federal funds rate. The primary credit rate is like the Fed's emergency lending rate for commercial banks. It's typically higher than the federal funds rate, which is the interest rate banks charge each other for overnight loans. The federal funds rate is the one that usually makes headlines. When the Fed announces a rate hike, they're usually talking about the federal funds rate. This rate acts like a benchmark, influencing other interest rates in the US, from mortgages and credit cards to business loans. Think of the primary credit rate as the last resort option, a bit like an expensive overdraft. The federal funds rate, on the other hand, is the everyday rate banks use amongst themselves, and its changes have a domino effect on other borrowing costs. So how do these US rate hikes reach our shores? It's all about interconnectedness. Firstly, higher US interest rates can boost the value of the US dollar. This is because investors are attracted to the higher returns offered by US assets, increasing demand for the dollar. A stronger dollar can make imports from the US more expensive for US Brits, potentially pushing up inflation. Secondly, US rate hikes can influence global investor sentiment. When the US, the world's largest economy, raises rates, it can signal that other central banks, including our own Bank of England, might follow suit to combat inflation. This can lead to higher borrowing costs in the UK, even if our own economic conditions are different. Finally, many UK pension funds and investors hold US assets in their portfolios. Changes in US interest rates can directly impact the value of these investments. For example, if US bond yields rise due to rate hikes, the value of existing bonds, including those held by UK investors, tends to fall. Section 4. Steering your finances in choppy waters, practical tips for Brits. Given these potential impacts, what can we do? Firstly, review your savings accounts. Are you getting the best possible interest rate, especially with the potential for rising rates in the UK? Check comparison websites and consider switching for a better deal. Secondly, if you're a homeowner, check your mortgage's competitiveness. If you're on a variable rate, now might be a good time to consider fixing a portion or all of your mortgage to protect yourself against potential rate rises. Speak to a mortgage broker to explore your options. Thirdly, diversification is key for investors. Don't put all your eggs in one basket, especially one heavily exposed to US assets. Spread your investments across different asset classes, geographies, and currencies to mitigate risk. Remember, knowledge is power. By understanding how US interest rate changes can impact your finances, you can make informed decisions to protect and grow your money. Section 5. Stay informed, stay ahead. Navigating the global financial seas. In conclusion, while the US Federal Reserve might seem a world away, its decisions can significantly impact us here in the UK. By staying informed about US economic news, especially interest rate changes, and understanding their potential ripple effects, you can navigate the global financial waters more effectively. Remember to regularly review your finances, seek professional advice when needed, and stay adaptable in the face of changing economic tides. As the old saying goes, forewarned is forearmed.